Great. Welcome to Digital Asset News. My name is Rob, and today we got a lot of things to go over. First of all, as the thumbnail and title suggest, I think this new report from the White House is actually good, and we're going to talk about exactly why that is, even though it calls for a potential ban on proof of work, which would also very much be Bitcoin. So we'll talk about that, and then we'll talk about the Sharpe ratio for risk assessment, interview with Alan Sokolitsky from Masterworks, and lastly, we'll do the NFT giveaway, which I promised a couple of days ago, which I missed, for ladies and Ds, and we'll do that at the very end. And then, of course, at the very, very end, do a little Q&A. So first things first, let's talk about this report. And I was really excited about this report, and I think it was part of the reason why there was a pump in the price of crypto. There's a couple of other factors. There's never one specific thing. I know people were pretty worried about the report itself, and they made a lot of talk about it. But when I take a look at it, I go, I think this makes sense, and we're moving in the right direction. So the first things first, if you haven't watched Charles Hoskinson's response to this, it's classic. It's great. Charles never disappoints. You should follow him on his channel. Great stuff as he talked about the report, the report itself. It was really good. And I was going to put out this video yesterday, but I had to be with the guys over there at DCA. It was me, Ben, and James, and we talked about everything from what's going on as far as inflation, Europe, where we see Bitcoin going. It's a pretty good 50 minutes long interview we went over. Links in the description. But this is what it all comes down to. This report, this report right here. Climate and energy implications of crypto assets in the U.S. I'm not going to go through it. Thankfully, cryptoslate.com did most of the hard work for me. And they pretty much just gave us the best information from the report about what's going on. So this was a report titled Climate and Energy Implications. And the White House called for standards like miners using clean energy and the need for low energy intensities. This is a result of President Biden's executive order on crypto earlier this week. And remember, this was like a big news. Like there was a council. President Joe Biden said, hey, we should take a look at what's going on with crypto and assess if it's actually going to be good or not. And after so many months, this was the report that we got. And opinions vary. This is just my opinion. I could be way off. I could be super wrong, but this is just the way things that I see. But this is the basics of it. So the report took a step further by recommending a possible limit or ban on crypto mining if the measures don't prevent the negative impacts of crypto mining. Of course, what they're talking about here is the massive amount of energy use. Some may dispute the word of the adjective of massive, but it does use a lot of energy. Let's just be honest. So it states this: should these measures prove ineffective at reducing impacts, the administration should explore executive actions, and Congress might consider legislation to limit or eliminate the use of high energy intensity consensus mechanisms, proof of work, for crypto asset mining, Bitcoin. So that's pretty much where they went with this report. And I know I can understand why people take a look at this and go, that's pretty awful. Just wait, we'll get into all this stuff about why it's not a big thing. So the report also highlighted the high energy consumption of crypto mining. It did state, though, about 0.3% of global annual greenhouse gas emissions. 0.3%. Not too bad, I don't think. The White House also wants electricity grid operators to ensure crypto mining doesn't affect grid stability. We're already doing that in Texas. I'll talk about that in a second. And then he talks about innovation. And I think this is where I think this part was missed a little bit, and people kind of glanced over it. This is what they always wanted. This is all ESG compliance. This is moving away from fossil fuels. This is going into innovation. And I think that's what it is. And I know I'm going to take a very unpopular opinion. I think this is where we should be going. Not for ESG compliance, but just for a little bit of regulation, just to show us or to lay it down, like give us the rules so I know what the rules are so I can play the game and I can bend the rules to my whim. So this is what it states. The report acknowledges innovations on the parts of miners and mentions miners that use flared and vented methane for their machines and how this is positive for the climate. If you don't know, for oil rigs, when they do these to blow these off, this is just waste, and it is not conducive to the environment. However, if you can harness that and use that for electrical capacity, especially for Bitcoin mining, that's a positive. And that's what they said. If they can use that and it doesn't disrupt the grid, so much the better. And it said miners could volunteer or be required to build zero carbon energy capacity that produces more electricity than their crypto mining facility requires. What does that mean? I'll get into that. So here's what it comes down to. There's a couple of reasons why they're not going to ban Bitcoin. And I'd like to say that this isn't the primary reason, but I think it is what the primary reason is. And it comes down to this. They're making a lot of money. And this is Ted Cruz from the great state of Texas, where I'm living right now. We're actually vacationing in. And it states Ted Cruz is going to bat for crypto in the U.S. This is just on September 2nd. If you don't know, Ted Cruz is a big proponent of crypto and the Bitcoin mining operation. You know why? It brings money to the state. It also brings a lot of jobs. And when you're running for Senate, those are two good things, especially in this junk economy that we're going through. So if we can do that, so much the better. Now, nobody really likes sky-high electricity prices. We'll get into that in a second. He did state, I am proud to lead the fight of the crypto industry in the Senate. Texas will continue to be the center for crypto innovation. And also, if you take a look at the bigger picture, the United States is crushing it as far as for Bitcoin mining operation. This is a great chart. Cambridge Bitcoin Electricity Consumption Index. We're going to take a look at two different things. First of all, the visualization of the Bitcoin mining map globally. And we're going to start here in August 2019. And you can see that as far as the concentration of Bitcoin miners, the darker, I guess this orangey would be, is the more concentrated of the Bitcoin miners. In August 2019, not too long ago, China had 75%. I know people didn't want to say that, but it was true. 75%. Russia, 5%, 6%. America, kind of laggards, 4%. Now just watch this as we go through, and you can see that the prices, or not the prices, the actual concentration of Bitcoin miners are changing a little bit, but right around, here. Look at that. From May 2021 to June 2021, what happened? Well, that was China's mistake, as they banned Bitcoin miners. Now, there's still some Bitcoin mining going on in the background. We know that is to be true. But right now, look where we're at, 35%. As far as the hash rate, as far as June 2021. If we go forward, you can see a little bit more happens in China, illegally, I might add, but that's whatever they want to do. And the last one they have is December 2021, and we're staying at almost 40% of the global hash rate in 2021. America doesn't want to lose this. There's an electricity, there's a war going on between tech, innovation, and AI. And make no mistake, it's between US and China and a couple other different countries. If they want to do away with it, so much the better. And then if we kind of drill down in different states, if we really wanted to, you know that Georgia produces 30% of the hash rate share of the US? 30%. Texas 11, Kentucky 10, New York 9.8%. And then remember when I talked about as far as the grid stability? Well, guess what? In this state, Texas and a lot of other states, they do what everybody does, I think, is they shut down. We just had a massive amount of climate, not climate change, but an increase in the temperature, 100-degree days for well over 30 days. And that put a big tax on the electrical power grid. So what did they do? They said, hey, Bitcoin miners, shut down. And they said, fine, we will do that. Not only that, they paid them to shut them down so they could stabilize the power grid. And to really delve into that, and I think this is exactly what that report talked about as far as grid stability. So if we can do that, okay. So this was an article, Bloomberg, Bitcoin miner shut as Texas power grid increases, demand increases. This is from July 11th, 2022. So miners such as Riot, Argo, and Core Scientific have come to the Lone Star State thanks to its low energy costs and liberal regulations on crypto mining. The city has become one of the largest crypto mining hubs by computing power in the world. And I will just say this, because our electricity is so cheap and we've only gone up a little bit, in a lot of European countries, and correct me where I'm wrong here in the comments section, but a lot of the Bitcoin miners have shut down because it's just too darn expensive. So if we take a look at it, well, what's going to happen? Well, they're going to have to shut down. The difficulty is going to drop. And then the people that actually keep the rigs on, unfortunately, that's good, or fortunately in America, that's what's going to happen. And we're going to do a lot of that Bitcoin mining. Now, I don't think that America wants to lose that competitive advantage, but maybe I'm wrong. But this part kind of sums it up. There are over 1,000 megawatts worth of Bitcoin mining load that respond to ERCOT's conservation requests by turning off their machines to conserve energy for the grid. This is Lee Bratcher, president of Texas Blockchain Council. This represents nearly all industrial-scale Bitcoin mining load in Texas and allows for over 1% of total grid capacity to be pushed back onto the grid for retail and commercial use. 1%. So up to this point, it's sounding pretty good. And I'm making a pretty rosy case for Bitcoin, let's be honest. But I must be transparent with you. I own Bitcoin. Everything I talk about on this channel, I'm super biased. But I'm not a Bitcoin maximalist. I'm just not. And there are some problems out there that we can definitely see. So especially with what this report or this article also talks about down here. So don't get too happy, Bitcoin maxis. While Texas is likely to face more energy shortages in the future, ERCOT expects crypto miners to increase electricity demand by up to 6 gigawatts by mid-2023. That's more than enough to power every home in Houston. I got to tell you, if we keep going on that route, it kind of seems a little unsustainable. Am I wrong? I mean, it seems like, and of course people say, well, it's an economic revolution. We should put as much electricity power that we possibly can into Bitcoin. Here's the thing. Some places can do that, and I think you can drop off, but I don't think there's going to be Bitcoin mining globally if we still see these massive increase in prices. People in the comment section tell me all the time about how European nations are going, 5, 7, 8, 10x of natural gas. Electricity is going through the roof. And of course, winter's coming up. So I just don't see how we can keep those miners in operation. Now, we can still keep miners in operation, but I don't know what's going to be globally. And then also, if we take a look at the Cambridge report for comparisons as far as production of energy, which I linked this in the comments or in the description so you can check it out for yourself. Bitcoin for terawatt hours per year, 94. It's a lot. But gold is 131. Do we need a lot of that gold mining? I'm just asking because everybody asks me about Bitcoin mining. So I got to ask the question, do we really need that much gold mining? Copper is 167. Bitcoin down here is 95. Data networks, 250. Paper and pulp, 586. Iron and steel, 1233. I can see that. Cement, 3 to 4. Lighting in the US is 60. And so on and so forth. So the big question then becomes ESG compliance. Really, that's what it really comes down to. ESG compliance. How can we get this number right here to where these big institutions, which everybody's so hung up on, to come into the space? I'd like them to. It's not like I would hate them, but just remember that once the institutions come in, and the more that they come in, they're not here to, change the world. They're there to change their bank account. Really, that's what it comes down to. And of course, with ESG compliance, this is a thing that's been harped on by Kevin O'Leary, Mr. Wonderful. He talks about how, Bitcoin and the ESG compliance issue, and they should really go to renewable energy sources. And when that happens, then of course, more institutions will come in because they can put it on their balance sheet and so on and so forth. And I think it could. I mean, why couldn't, if we have an industry that's almost $500 billion just in Bitcoin alone, don't you think that they'd want to be competitive and actually be a part of this? So if they have to install, solar panels, wind sources, and other different things to make them profitable, don't you think they would do that to move forward? And then everybody could be happy. You could have this whole narrative of ESG, all the narratives that's coming out by the White House where they want to be energy independent. I think it makes a lot of sense. And then there was also this. This was an interesting piece that I had retweeted on September 7th. It's about geothermal energy. And there's just more options. There's more options than nuclear power and solar and wind and hydro. And there's a big problem with hydroelectric power as we see more droughts coming up. But just take a listen to this and just tell me if, this could not be a part of reducing the Bitcoin or the consumption of power. And again, it's not that Bitcoin consumes so much, but if the mining operations can actually make it through these different types of power, so much the better. Then they can put it back on the grid. So just take a look, listen to this, about 2 minutes or so. Let me stop the screen. Let me share the tab so you can actually hear it. And listen to this.
California is bracing for a historic heat wave. Texas is suffering through what may be the hottest summer on record. New technology in housing aims to make homes more weather resilient and more environmentally friendly. Diana Olick joins us from just outside Austin with a look at some of those technologies and how they're being implemented. Hi, Diana.
Hi, Contessa. Yeah, I'm standing on top of the largest ever residential geothermal grid. Every home in this 2,000-acre development will be heated and cooled by the system, which is powered by solar.
So if you just travel down below your feet, 30 to 40 feet, it's a constant temperature all year round, 72 to 74 degrees. So we want to access that because that makes the heating and cooling equipment all the more efficient.
EcoSmart Systems, a subsidiary of developer Taurus Investment Holdings, pumps water deep underground to access that mild temperature through the water.
And these are the pumps that are used to distribute the water throughout the entire geogrid.
A geogrid that will eventually heat and cool more than 7,000 homes. Before any construction, boreholes about 300 feet deep are drilled in front of every lot to circulate the temperate water to each home. Thurman Homes is one of the builders.
With the investment of a geothermal, the day you move in, it's going to be saving you money.
Just ask homeowner Jennifer Abamonte.
We essentially have no power bills at this point.
The cost of a home here is about $10,000 more than a comparable home, but buyers seem willing to pay and add features like a battery backup.
It's been really nice when we've had even minor outages to not have to worry about things continuing to function.
And the recently passed Inflation Reduction Act is a massive windfall for commercial geothermal development, tripling the tax credits. The government backing also gives investors that essential certainty that they need to push this technology to a much larger scale.
Does it make sense? I mean, look, that's just one of many different options that are out there. So when I took a look at that, I'm like, well, first of all, when the reporter, she came out and she said, she said it was powered by solar. I'm like, what? That doesn't make any sense. And maybe I'm wrong here, but geothermal, as I understand it, is a form of energy conversion in which energy from within the earth is captured and harnessed for cooking, bathing, space heating, and electrical power generation. As I understand it, the deeper you go into the earth, it gets a little bit hotter. So that's the whole thing with geothermal. I don't know where that solar panel or the solar comment came from the reporter, but I just wanted to clarify that. And then if we take a look, as far as like pricing and things like that, this was from Climate Reality or Climate Reality Project. It talks about how will I really save money with a geothermal system. And this is going a little off topic as we take a look at our friends in Europe. Homeowners save 30 to 70% on heating and 20 to 50% on cooling costs by using geothermal heat pumps compared to other conventional systems. This translates to roughly $400 to $1,500 annual savings. And this report was 4 years ago. You could recoup the cost of your geothermal system installation through energy savings in as little as 5 years or as many as 15 or 16. And if you are in Europe and you are paying 10x the price for natural gas, whatever electricity source that you're using, especially as winter is coming, maybe this would have been the answer retrospectively. Of course, you know, taking a look at everything, hindsight is 2020. Especially if we take a look at the governments. But when we take a look at all the things we just talked about, would this not hit the requirements of what this talked about in the report? The report focuses primarily on establishing standards for crypto miners and recommends several measures to limit the energy consumption of proof of work mining. We'll just create more electricity. If they can do that, especially what we just saw, I think it would make a lot of sense. Anyhow, that's what we have for that report. Let me know what you think about that in the comment section. It was a little bit longer. Wow, that's way too long. Sorry. And let's go on to our next piece, Sharpe ratio and risk assessment. So real quick, in our industry here, it's a little bit risky. Let's be honest. It's a little volatile, and that's just what it is. But there is this thing called the Sharpe ratio. It measures the profit of investment that exceeds the risk-free rate per unit of standard deviation. It's calculated by taking the return of the investment, subtracting the risk-free rate, and dividing this result by the investment's standard deviation. And I think it's important because it's all about risk versus reward, and especially what we're getting into. So like, let's be honest, this is not financial advice, but in crypto and digital assets, it's a pretty risky sector of investing, right? So if we could kind of minimize that, I think it's a little bit important. I think. And that's why, like I'm always talking about, of course, diversification. I don't just invest into crypto. Also, a little bit of stocks, mostly lands and real estate, though. 10% goes to the Amazon business. I also do staking, I Trust Capital, and of course, yes, Masterworks, which is a sponsor of the show. Now, you don't have to use any of the affiliate links that I have, but if you do, you get to skip a wait list. And of course, the things I talk about in the show, I have skin in the game. I've got 2 fractionalized shares of 2 great artists, Banksy and a Basquiat. And so far, I'm up 40% of the Basquiat for the year. So again, when something goes up or when something goes down, you want something else to go up. That's kind of how I look at my portfolio. And to help us out with this, the Sharpe ratio, I invited Alan Sokolitsky, the chief investment officer at Masterworks. And the reason was because I kept getting these emails for different offers, and it kept talking about the numbers of Sharpe ratios, 0.94 versus all art market of 0.48 and 0.55. I want to know what the heck that was talking about. And then I wanted to talk about the performance to date, because I got to tell you right now, Masterworks is beating traditional finance and it's crushing crypto. And then lastly, I want to talk about safety, because we've been kind of rug pulled lately in crypto. So I want to ask, what's the whole point with their securities and actually registering through with the SEC? So without further ado, this is a quick interview, about 9 minutes or so with Alan, and I'll let him explain all those things. As promised, I brought somebody in who could help us give a little more light to what's going on with Masterworks. Alan, Chief Investment Officer, thanks for coming to the show. We appreciate it.
Great. Thanks for having me.
Yeah. So, Alan, I've been using Masterworks now for 9 months or so. My first one, I picked up a Banksy, so I'm pretty happy about that. And there's another one. And I will tell you this, I know nothing about art, so I want to say thank you so much for you guys and all the information that you guys bring to the table. Yeah. It helps me tremendously.
Great to hear.
So yeah, the Basquiat, that's what it was. So there's a couple questions I have. First of all, I've been seeing some interesting data that you guys put out, and it looks like the risk to reward ratio, and especially in our market, we are extremely volatile, and it's important that we understand the risk to reward. So we'll talk, if you could talk about that, and also how are the metrics looking over there at Masterworks? How are everything's growing and whatnot? And then also the big one, I think, and I get this a lot, is safety and trust. In our market, there's a bit of difficulty with that. So I want to see how we are hedging against that over there at Masterworks. So the first one, Alan, explain to us as far as like the risk to reward, because what I saw when I saw this email, I was like, that's pretty interesting. When we had to take a look at the this offering of 0.94 versus all market 0.4 and 0.55. So what is all this?
Yeah. So what we've done is we've introduced this metric for investors in the traditional world of finance, which actually is the world that I come from. That's where my career pretty much spent most of its time. There's something called a Sharpe ratio. And the Sharpe ratio, what it does is it basically measures an investment's return, or how well or how poorly it's done, relative to how much risk that investment actually had. And if you think about that, I mean, sometimes I use the following phrase. I call it, it's sort of like a measure of bang for the buck in a lot of ways, right? Okay. So it's easy to look at an investment's return, right? Did it go up or down or stay flat or whatever the case may be? But it's a little bit more nuanced, and it's often a lot more informative to use something like a Sharpe ratio, because it tells you, okay, we know how well or how poorly the investment did, but how about how much risk did I need to actually take to get that performance, right? So in other words, maybe you got a really attractive return, but maybe you also had to take an extraordinary amount of risk to get that return, right? That's the type of information you would want to know. How much risk do you have to take to potentially get that return that you're getting? So we've introduced the Sharpe ratio for a lot of the different artist markets that we track. And we basically compare it to the Sharpe ratio that the S&P 500 has generated. Okay. And then we compare it to the the Sharpe ratio for the overall art market as a whole. And so what we like about this metric, what we think helps investors understand, is with a lot of individual artist markets, you can actually get very attractive Sharpe ratios in terms of their performance. And, I'll give you one one simple example. So I mentioned I come from the traditional world of investment management. You know, I can tell you that there are a lot of professional hedge funds all over the world who would love to consistently hire traders whose strategies can generate Sharpe ratios of close to 2. And yet, believe it or not, there are actually quite a few artist markets that have been generating Sharpe ratios of close to 2. It's just one of those interesting things where most investors probably have never even thought about a Sharpe ratio for an artist market. And so we're providing that information to say that a lot of these artist markets are actually quite attractive.
I gotcha. So, and then when I took a look at this email, and I had to email Jack over there at Mass, and I said, hey, is this right? Because 0.94 seems pretty high. He's like, yeah. And he goes, we've also had one at 1.38 and I think a 1.4 somewhere on there, as opposed to
also even some that are higher than that, by the way.
That's insane. And then, so this is great. When I took a look at this, I had to actually reach out to you guys. So I'm glad you're here to explain it to us.
Yep.
So the next thing would be then is, let's talk a little bit about some metrics which show the direction of where Masterworks is going. Because I have to tell you, there's a little piece of information I usually talk about, which is the performance. And then year to date, I got to tell you, in traditional finance and even in our market in crypto, you guys are kind of crushing it. 15% compared to the negative red numbers. So what other metrics is Masterworks looking at as far as growth and how they're doing?
Yeah, I mean, you know, the performance since we started the business and that we had the first offering close in September 2019, all the way through this June, performance has definitely been attractive. I've actually put on my old traditional investment management hat, and I've looked at the performance, not just of the asset classes that you showed there, but even more on top of that. You could look at private equity, you could look at hedge funds, you know, there are a lot of other asset classes you can add. And the truth is our performance since inception has basically eclipsed pretty much all of them. So on a performance basis, we have been doing quite well. In terms of the business itself, and I think those two things, of course, often go hand in hand, right? If we've been demonstrating since inception that we can generate attractive performance, it usually means that a lot more of the investor community is becoming interested in our business. So it's one of these things where I find that anytime I'm invited to do an interview or a presentation, I'm constantly having to look up what are our latest numbers for the amount of registered users we actually have on our platform, because those numbers are growing all the time. The latest numbers I can tell you, we now have more than 500,000 registered users on our platform. Those numbers are basically growing by the thousands. It seems like every day that goes by. At this point, we brought north of 130 paintings to the platform to make available to investors. That's totaling roughly $600 million. So basically, the business continues to chug along quite well. We're broadening our outreach. There are a lot more investors that are becoming interested in Masterworks, and it's one of these things where we get the question sometimes, given all of the challenges that are being faced in pretty much every other asset class this year, how is that impacting your business? And my answer is, it's one of those things where if we were an asset class that was actually highly correlated to all of those other markets, then it probably would have a pretty negative impact on our business. But at the same time, I think more and more investors are starting to realize, wait, after the last several years and everything that Masterworks has demonstrated, it actually does look like the art market is in fact not correlated to any other major asset class. So we're getting a lot of interest even in the current market environment.
Oh yeah, and I can tell you, I mean, even just for myself, and I I had that the Basquiat, and it's done. I think we're up almost 40% since I purchased in October 2021. So coming up on roughly a year now.
Yeah.
So not too shabby. And then, I mean, just like what you talked about, if we're going to talk about portfolio and balance, I mean, it really just comes down to the balance. When something goes down, you want something else to go up, and vice versa. It's really about diversification and just getting out there. Because if you just have all your eggs in one basket, I think it's a recipe for disaster.
I could not agree more. We are very big on building diversified portfolios. At any point in time, if you go to our website at masterworks.io, you can see a number of different investments that we have on offer. And to be honest, it seems like every week we're basically bringing more and more new investments to the platform. So we strongly encourage investors to always consider diversifying their portfolios. It's not any different from the conversations that investor might have with a financial advisor, or if they're managing their own portfolio, the same way that you probably don't want one stock to represent the entirety of your equity allocation, you probably should diversify that into at least several stocks, if not more than that. It's the exact same story in the art market. And so the one thing that I'll share is that, the thing about our acquisitions team, which basically their backgrounds are from the major auction houses, the galleries, the dealers. I mean, they've been involved in the art market for decades at this point, as you might imagine, for a company that's making art investable. So all of the artworks that we bring to market, ultimately that the acquisitions team is interested in acquiring, these are works of art that have passed our pretty extensive and rigorous quantitative metrics process that we utilize up front to determine who are the artists that we want to be investing in and who are the artists that we absolutely do not want to be investing in. So I say this all as a way, sometimes when investors come to the website, they might see 5 to 10 paintings that are on offer. They're trying to figure out, well, is this one attractive? Is that one attractive? Everything I just said is basically my attempt at saying any painting that makes it through our screening process and onto the platform is by definition for us should be an attractive investment opportunity.
Gotcha. And then just to bring it home, this is not a get rich quick overnight type of thing. We're talking about holding on to these fractionalized shares of these fine art pieces for quite some time. But that's really what it comes down to, right?
Yep. It's definitely not an overnight get rich quick scheme. It's probably the farthest thing from that. The anticipated holding period for any of the paintings that we make available is, let's say, roughly 3 to 7 years. And so this is a multi-year hold. We always are very upfront and clear about that to investors. And it's one of these things where, the performance that we've been generating and the performance of the art market overall, it is quite attractive. And so it's one of these things where you have to realize, if you're interested in having that type of performance, you have to be fully aware going in that this is something you're going to have to give a few years to. That's sort of the way it works to invest in the art market. Now, to be fair, we actually have sold, the truth is, most of our paintings in less than 3 years, but that's more an example of how we do act opportunistically if we think it's appropriate. If we get a very attractive offer for a painting that we have, it's one of these things where if it's that attractive, we might very seriously consider selling it, even if it's under the 3-year mark. But once again, I want to emphasize the typical hold period is 3 to 7 years, and we want to make sure that our investors are fully aware of that going in.
Right. You know what? Well, you're preaching to the choir, because on this channel we talk a lot about this. It's a buy and hold. It's a dollar cost average. It's the long haul. If you're here for 6 months, it's going to be very difficult. If you have a 3, 5, 10-year time horizon, things tend to work out with a little bit of time.
Yeah, I often like to use the phrase, it's about time in the market, not timing the market. Right now, everybody, I guarantee you, everybody who is watching this video is laughing, because I say that all the time on this channel. Oh, really? Okay.
Yeah, perfect. So you know what? So we've reached on some pretty good subjects. Let's talk about the last one. And I think this is probably the most important: safety and trust. Yeah. In our market, we've had a lot of different issues that have come up. We've had a lot of rug pulls, a lot of insolvency. So with Masterworks, how do we keep this safe, and why should we trust Masterworks? Yeah, I mean, what I would say is, in all honesty, the art market historically has not always been the most transparent. That's just sort of a statement of fact. And when we started the business and we were trying to figure out what's the best way that we can offer paintings for investors, we ultimately decided to take the securitization route, which meant filing every one of our paintings as an offering with the SEC. Now, the reason that we chose to do this is precisely because it would bring an extraordinary amount of transparency to a market that, as I just said, has not historically always been known for having the most amount of transparency. And so
every one of our offerings, literally every one, if you go on our website, there is a link to the SEC filing on the SEC's website. And I often like to joke, if you want to become an expert on any particular artist or particular painting by an artist, go to that SEC filing that we have for that particular painting or that artist, and you will get 100-some-odd page document giving you an extensive background on that artist, on that painting. It'll give you provenance information, which means who owned it before us, who owned it before that person. We are trying to bring an extraordinary amount of transparency to this market, and we think that ultimately that helps. It goes a long way to build trust with our investors.
Excellent. Alan, I can't thank you enough for coming on to explain these things. This is important for the investor, the people out there. Now, this is not financial advice. This is just basic information, just passing along.
Yep.
But if you're looking for more information, there is a link in the description. Looks just like this. And we can go over everything that we just talked about. And also we did a deep dive and also a affiliate link that could take you right to Masterworks. So Alan, thanks so much for stopping by, my friend. Well, we appreciate it.
Thanks so much for having me. Talk soon.
All right. So thanks again, Alan, for stopping by. I do appreciate it. And I'll answer everybody's questions in the Q&A. I see a lot of spicy things coming up. And that will do it for that piece. And now let's do a giveaway. I think this is everybody's favorite part. So a couple of days ago, I think it was, we had the team from D's and Ladies come on for the NFT project. And I said, hey, if you guys would be so kind to go to this tweet and do 3 things. Follow News Asset, follow D's NFT, and retweet the tweet itself, and then we'll draw some winners. I forgot to do that yesterday, well, because I was on the DCA show. So let's do it right now, huh? And to make sure this is fair, we'll use Twitter Picker. And just so you know that the floor right now for this NFT project, you're looking at 0.08 ETH, which is about $120, $150, somewhere around there. So we're going to be giving away 4 of this project. So first things first, I need the tweet URL. Hang with me. I can do this. All right. And let's load the tweet. And there it is. Okay. So the winner is going to be 4. 2, 3, 4. And the profile must have a picture. Sorry, you got to have a picture. Tweet count, account age, you got to be over 1 month. And the latest tweet should be about at least 30 days. I don't want to give this away to bots because that's essentially what is mostly full of on Twitter. Click continue. Okay, so this is everybody who's eligible. Wow, 187. That's a lot of people. So, okay, click continue. All right, so status pending. So we'll begin the draw right now. And wow, look at that. Oh, 2 got rejected for whatever reason. Sorry, Alex and Steven, Michael. I don't know why I did that, but it did. So congratulations to Bunky Bunch, Peppo, Luis Salguero, and Michael Peterson. Excellent. Let me take a screenshot of this so I can. So all you guys got to do is reach out to me on Twitter at NewsAsset. You already have an account, I can tell. Reach out to me and say, hey, I was the winner, and we'll verify that with your Twitter account, and we'll give you the information as to how to redeem your NFTs. So that will take care of our NFT giveaway. Now let's get into a little Q&A. So look, I know it took, for some reason, that took quite a lot of time. I don't know what the heck happened, so sorry about that. But it's Saturday, so if you got to take off, I understand, and get out of here. I appreciate you stopping by. I really do. If you like today's video, thumbs up, subscribe, all that good stuff. But now let's get into the Q&A. I know there's a lot of questions about Masterworks and, of course, about electricity usage. So let's just jump right in, huh? All right. Q&A. Let me get out of this banner.